Hey traders from around the world, it's your boy Jeremy Alexander Newsome with reallifetrading.com. Trust you're doing absolutely sensational. It is Wednesday, May the 2nd, 2018, and as of today, I'm 30 years old. So thanks for all the wishes and warm merriment of kind verbiages that were bestowed upon me today. You're all simply wonderful people, and I love spending so much time with you. Thank you so much for all the goodness. SPY on the docket today, and really not that much going on. We're just kind of hanging out. There was some Federal Reserve, Fed meeting chatter just about last hour, realistically. And from 2 to 3 Eastern, we trade a little bit higher. And from onward, from 2 to 3 Central, 3 to 4 Eastern, we've just been doing nothing but selling off. So overall, I still think SPY longer term obviously is going to go higher, but short term, I'm still anticipating a pullback down to the 200 and maybe even a little bit of a lower move, more than likely a lower move. Kind of expecting something like this to eventually come in. And if we get down to 253, which again, that's just what I'm looking for. I'm not saying it will happen, but it would make sense for it to happen. That the SPY makes a little bit of a lower low. At that point in time, I'll look to get into a nice longer-term bull put spread. And I've been looking for some bear call spread premium, but there's just not really any at this particular point in time. The interesting part is the SPY is selling off. The Q's also pulling back, but your boy Apple, which is often a market leader, was up 4.5% today. A lot of traders are playing this one, and this is going to be a wonderful time, I feel like, to take advantage of some option selling premium for some covered calls or maybe a long-term collar. So if you have shares of Apple, consider some type of longer-term collar trade where you could sell a nice long covered call, maybe like a July, September, or something like that. And then, of course, get into some protective puts just in case we start chopping around again, staying in this channel. Apple had phenomenal earnings. They had some really good bullish news, or at least it would seem that way to me. And in this specific example on Apple, just kind of keeping an eye out for it to continue to chop around, trade sideways, and more than likely fill this gap. Here's the weekly chart and your exponential moving averages. Just a beautiful bounce off the 50. Had all kinds of traders get into some bull put spreads, put sales, and option selling last week. Pretty far away, so usually 140 and below. Ron got into the 160 for May and the June 150. So there were tons of people selling some options and taking advantage of that. Buy low, sell high, increased implied volatility on Apple. They had really good earnings. Everything about it was bullish. It's almost too easy for it to not go higher. So that's why I think more than likely we probably do trade up a little bit and then eventually roll down. Here's the 5-minute chart. I did fade Apple this morning for a very quick play. So this is the 5-minute time frame. This was a very intuitive, just a quick, really, really fast move. But as mentioned in the previous, updates, there's just a bunch of white candles. So you had all of these white candles gapping up to a resistance, and I figured a lot of people would want to lock in profit on Apple. So here's the 5-minute chart, and once the first few minute candles took out this pre-market support right there, decided that some puts looked pretty favorable, and really the whole trade lasted just 3 or 4 minutes. Looked to get out right around here because there was some support. I didn't think we would break it. It was an intuitional play. Just said, hey, let me get in, get out for a quick fade, take the game, and move on. Wish I had bought some calls with that hammer candle. I just, for some reason, took that off my radar. Very nice hammer, and it was out of support. So I should have just bought in long some calls and traded those up to that resistance. It would have been a nice 3R day. But overall, a lot of traders in long-term on Apple, and they're pretty pleased about its movement today. Here's Square, ticker symbol SQ, also coming up with earnings. And my thought is Square probably won't gap that much on earnings. Of course, we'll see. But an open below 43.50 will certainly trade it down to the 200. But a gap above 52.83 would be a real crowd pleaser. And I'm kind of expecting that to be what transpires. Let's look at a few stocks that were requested. Here's Twitter, TWTR, and here's your long-term moving averages. And that's probably the most important moving average on Twitter right now is that 100. As you can see, we've bounced off of there numerous times before. If you hop in here to the hourly chart, turn off the extended hours, and pull up the exponential moving averages, what you'll see is they're going kind of sideways. They're going pretty flat. And I would really like to see Twitter make some higher highs and higher lows into the 32 area, then buy the dip into this pretty much where it is now. But I feel like you could buy it about where it is now a few days down the line, and we'll just have to see exactly how that moves. So this is the daily chart. Your long-term moving averages doing their thing. Here's the weekly time frame. Above the exponential moving averages, you got the 20 right there. Everything's holding strong. Looking pretty toasty. So overall, I would say it's a little bit more bullish than bearish. Here is CVS, which is a stock that was looking pretty interesting for some period of time here on the weekly chart in a nice looking channel. And this one just bamboozling traders of all ages and of all premonitions with bullish and bearish. I mean, look at this. Just very interesting channel play. Broke out of a low, probably where some people went bearish, trade all the way back up here. Trade back to resistance, made another low, trade back higher. So CVS, safe to say, is very, very choppy right now. Granted, the long-term moving averages, you are battling the 100 simple on a monthly chart. No slouch by any means, as it has bounced off of these moving averages many times before in the past. So if you come to a daily chart, you can see we just banged our head against the long-term 100 simple, and that's why we're pulling back. So for me to be bullish on CVS, I would want a close above the high of today and really prove itself that it's going to make some nice movement. Otherwise, CVS, I would just let it be for right now, and I don't really see anything exceptionally exciting on that one. Here's Shutterfly, SFLY. Now, I did not play this one today, but I want to bring it to your attention because this was another great example of a nice high wave candle. Here's the 5-minute chart. So you had a good bullish retest gap, and the first 5-minute candle was a bearish candle. Second candle was a little bit of a bullish candle. Entry would have been there. Stop would have been right there. And it broke out, retested, continued higher, and all things look pretty good. So that really is Shutterfly, and that was a nice retest gap. So the trend is certainly bullish on that one. Volume is good, gap was good. It is a retest gap, so just keep your eyes peeled, and we'll see if we can buy a dip on that at some level. SAIL, SailPoint Technology Holdings, did just get trailed out of that just about 20 minutes ago. So this was a trade that we placed 2 entries on, actually. You can still see those entries, 23.86 and 23.04. It was a good trend. I was just simply setting those up to buy the dip. So the good news is, one, a little bit less than 1R on SailPoint Technologies. I did lose on Blue Apron today when I had to close it out because earnings were tonight and it never hit my target. Keep your eyes on Blue Apron. If it can gap up on earnings, which I don't expect it to, but if it does and it opens above $2.39, I could really see this thing making some nice soft waves higher. Well, that's my analysis for Wednesday, May the 2nd. Here is a quick burpee workout for the May Health and Wellness Challenge. So many traders taking me up on it. Thank you so much for doing that. It's been really exciting. This is not going to be the last video I'm going to produce for you of me doing burpees. We're going to have a lot of fun working out together. There's a lot of traders taking me up on the challenge, those traders who are 55 and older, and those traders who are 55 and younger. This is a really exceptional time to be alive and to be a part of the market and to be a part of real life trading. So thank you so much for that. You are amazing, and I will see you all on Friday for your next real life stock review. And until then, remember, love life, live life, and trade it. Bye. Hey everyone, it's me for May the 2nd, which means we're going to be doing 10 burpees today for your health and wellness challenge here at Real Life Trading. Ready? Let's do it. Now what's interesting about this workout is it really can be done anywhere. So right now, I'm in the hallway or the walkway to the entrance of my buddy's house. And it's a very tight, very easy confined space. Nice workout, simple, effective, tons of energy used, tons of muscle used, and it's a great workout. Bottom line, your heart's gonna start getting faster at this particular point. Tomorrow, I'll see you at 15. You rock.